Welcome back, everyone. Let us now welcome the next session of the day entitled Banking 4.0, the future of finance, with a huge group of panelists. Moderating this session is Malik Kotadia, the co-founder and chairman of the Global Impact FinTech or GIFT Forum. Malik is a digital banking professional, FinTech mentor, futurist, acclaimed author, and FinTech faculty. He has also been listed among the top FinTech champions in Singapore of 2018 and 20 FinTech experts to watch out for in Dubai 2019. Malik has mentored over 10 cutting-edge FinTech and has engaged with over 300 startups all over the world, scaling up to successful, sustainable businesses. With that, I pass it over to you, Malik.
Thank you very much. Hi, everyone. Good morning, good afternoon, good evening, depending on which part of the world you are joining from. It's my pleasure to be back in Malaysia, in KL, although this time virtually. I hope at the onset, everyone is keeping safe and you are all well and your families and colleagues are well. Our continued support and prayers for our colleagues and friends in Malaysia. With that, I am very excited for today's discussion. It's something many of us from the industry or from the ecosystem discuss almost on a daily basis. What is the future of finance going to look like in the next 10 years? And this is, I guess, the million or the billion or the $1 trillion question, however you may think about it. And let me give you a couple of examples to lay the context before we get into our discussion. I think for those of us in the industry who've been here for the last 20 odd years, I have been in banking for more than 20 years. My colleague here, Maggie, has been here for almost 25 years. So if you see the last 10 years of finance, they have been very different from the past 30 years. And if you were to attempt some crystal ball gazing, I bet anyone wanting to predict how the next 10 years would look like would probably say that it would look nothing or very different from today's banking. So I think that is the context and the situation we are in. There are so many forces at play. And we, for those of us who are also part academics like me, we like to structure things. So if I were to look at the evolution of finance and how it has evolved over the last few decades and how we expect it to evolve over the next 10 to 20 years, we saw finance 1.0, which was largely product based. So we had various product lines in banks, from cards to loans to deposits to trade finance, etc., etc. It was all very product based and it was always very inside out. Then over the last few years, starting with Europe, we saw the evolution of finance 2.0 or open finance, which has largely been powered by open ecosystems, APIs, the growth of APIs, and to a large part, policies and regulations as well. Again, with the rise of big tech players, we've now seen more and more of finance 3.0, or what we call as embedded or invisible finance, and we look at that. And headed into the future, we are seeing another interesting trend shape up, which is finance 4.0, or as some experts like to call it, DeFi or decentralized finance. And if you were to kind of, summarize it, these are anchored by the 6D pillars, as I call them: digitalization, democratization, decentralization, data, demonetization, and disintermediation. And of course, these are powered by exponential technologies, what we call as the ABCD of FinTech. So AI, blockchain, cloud, big data, and IoT as well. So it's a very, very exciting time that we are in. It's also a time for great uncertainty because, if you're a traditional banker, you're always wondering what will happen to your organizations and your jobs as well. If you are in the FinTech space or if you are a big tech, you are always looking over your shoulder and you are seeing how things are changing so fast. So to make sense of all of this and to try and give us our distillation of where we see the future of finance over the next maybe 10 years or so, it's my pleasure to introduce a power-packed panel from all across Asia. These are experts from all over the region. I would like to welcome Maggie Yung, the managing director and my former Citibank colleague from Hong Kong. She's now the head of digital at DBS. I would also like to welcome my friend Hock Chia, who's a well-known figure in ASEAN when it comes to FinTech. He was the founding president at the Singapore FinTech Association and now our general secretary at the GIFT Forum. I would also like to introduce and welcome Chonladet from Thailand. He is the president of the Thai FinTech Association, and again, a well-known personality in the region. He is also on our executive committee at the GIFT Forum. And last but not the least, our very own homegrown champion and leader, Ridzuan, needs very little or no introduction, the founding president of the FinTech Association of Malaysia, also on the executive committee of the GIFT Forum. So with that, I would request each of the panelists to do a very quick, brief round of introductions, not too long, maybe 30 seconds to a minute, and then we'll jump into the questions. We'll start with you, Maggie, and then we can go in alphabetical order. So maybe Chonladet, Hock, and Ridzuan.
Hi, thank you, Malik. I'm Maggie Yong. I'm actually now I'm managing the digital customer experience and ecosystem of DBS Hong Kong. It's my pleasure to join the forum today. I make it really short. We can hear from me going forward.
Thank you. Chonladet, please.
Hi, I'm Chonladet from Thailand. As the president of Thai FinTech Association, it's my pleasure to join you guys here on this panel. So let's discuss.
Thank you, Hock. Hock, I think you're on mute.
Hi, I'm Hock. I was the founding president for the Singapore FinTech Association, currently the co-chairman for the Blockchain Association Singapore. Pleased to meet you all. Happy to share more later. Thanks.
And Ridzuan, I know you don't need an introduction.
Yeah, I'm Ridzuan from Malaysia, been around as a regulator, as a banker, now as a serial investor in a few fintech companies and sitting on a few boards. Yeah, happy to share a few things later with everybody. Looking forward. Thank you.
Thank you. And I just want to also highlight that one of our panelists, Dr. Oriol from Barcelona, unfortunately is not able to join. He had a family medical emergency. So he continues to be in our thoughts and prayers. And anyways, we have a great panel here, so we'll continue with them. Let's jump in straight away. And my first question is obviously on open finance, how it has evolved in Asia, how it is evolving in Asia. My question is to both Maggie and Ridzuan. Tell us your view and explain very simply to our audience your idea of open finance. That is one. And two, how does it maybe differ in the Asian context versus, let's say, the European Union, where we hear about PSD and PSD2 all the time, that being the kind of forefather, or that being the harbinger of open finance or open banking. So tell us, how is it in the Asian context? And finally, what does it mean for banks and fintechs in our region over the next maybe 5 to 7 years? Ridzuan, you can go first, please.
Thank you, Malik. I don't want to give the ladies first, but it's okay, all right? Yeah, I think in Asia is a bit different in terms of how this actually can evolve and how it is evolving at this point in time. Because in Europe, the regulations are pretty standard between the members of the EU. Hence, it's logical for them to start the open finance based on the regulatory approach. But I think for Asia, it is a bit difficult for us to go on the same approach in terms of looking at it from a regulatory perspective. I think, in my opinion, how things can evolve and should be evolving in Asia, it should be from an infrastructure perspective, where the interoperability between ecosystem and the players within those ecosystems, the inter and the intra, could be a very interesting prospect in terms of how it can evolve actually. And later we can actually share further in terms of how this infrastructure can be built, whether through blockchain or using any other new technology that we can use. Over to you, Maggie.
I think I always like to address from the customer viewpoint, because I think open finance or open banking actually create us and I think the very unique opportunities for us to solve the customer problem. I think in the old days, if you want to, make a purchase of your house or properties, you need to go from, the property agents, the developers, and then go to the bank. I think open finance is ready for us to solve the problems in one journey. So from the property searching, from the, instant valuation, and also from the loan approval, I think all can be embedded into one journey. So DBS, like for example, we have a marketplace for the home buyer. I think this is a classical example for open banking. We are ready to solve the problem. And that's the reasons why I think all these infrastructure need to put in place, and the bank need to get ourselves prepared to make sure that our technology is welcome all these open APIs and more flexible and agile, to consume the services of our partners. And then we need to work together. So I think it's a very great opportunity for us. I really look forward to it. But in fact, it's top of mind strategic imperative and bordering all these CEO, how it should be. With all these new fintechs coming in, and what is our positioning and what is our role to play.
Thank you, Maggie and Ridzuan, and that was great. One looked at it from a big picture perspective. One addressed it from a customer centricity perspective, and I'm not surprised at all, Maggie, you speaking about customer centricity. You've been speaking about it for a long, long time. So I just want to go a little deeper into this. And Ridzuan, what you spoke about, the two I's, infrastructure and interoperability. I want to press further and go to Hock and Chonladet. When we talk about interoperability, I think we are already seeing steps in that direction. We saw, the recent announcements of cross-border payments between, or pilots at least, between Singapore and Thailand, or now I think we heard Singapore and Indonesia most recently, a couple of days back, I read. So tell us a little more about how this has evolved, and where do you see these cross-border initiatives going, whether it is between Pay Now and Prompt Pay. And I just logged in today morning to, I think, my UOB account in Singapore, and I could see that option of pay via Prompt Pay in Thailand. So that was quite interesting that it's already beginning to go live in banks. Tell us a little more, and I know we are not regulators, but what is the thinking behind this, and do you see this really taking off, this connecting of cross-border rails between various country payment systems, which are already quite successful? So we can start with you, Hock.
Yeah, I mean, I think all these initiatives they want to solve one key problem that has still not been solved, which is reducing the cost of cross-border payments. Which is why you have like more than 80% of central banks experimenting on central bank digital currency. And all these are really made possible because of over the last few years, whereby the blockchain technology becomes more mature. So recently, for example, like the Monetary Authority of Singapore, in conjunction with the Banks of International Settlement, they are working on what we call MCBDC, allowing creating a shared platform, allowing various central banks to leverage on the platform to allow a more seamless and low-cost way of moving money across borders. Basically, in a way, disintermediating the currency of choice for all these exchanges, basically US dollar. With all this kind of utility, you are able to exchange one currency to another currency directly without going through US dollar, and then reducing one layer in all these things. So if you look at the cost of moving money, especially in terms of remittance, right? Typically, it will cost about 6 to 7%. All these initiatives are to lower the cost. I think United Nations or World Bank has a target to reduce it to close to 3%. Yeah, so that is probably the key impetus for all these initiatives.
Thank you, Hock. Chonladet, do you see this as something which will give a big boost maybe to remittances within Thailand? And I know Prompt Pay has been one of the most successful national payment systems in ASEAN. But tell us how this connection between various countries in ASEAN is likely to play out, and what do you see as the benefits but also the challenges?
Yeah, so first of all, the Prompt Pay here in Thailand and Pay Now in Singapore, and the collaboration among them is one of the most advanced payment system before the blockchain, before the CBDC. So I agree with Hock that after this MCBDC, everything would be changed a lot. Okay, so you can see that the remittance among countries, the cost will be more efficient. I could say much more efficient. And then thanks to the programmability of the CBDC, okay, I mean both wholesale and retail, it would allow us in the capital market to innovate so many things, such as the issuance of the bonds or the stocks directly, and to bypass or disintermediate the clearing house or the settlement house. Okay, so this one would give impact to both of the payment and capital market. So I think it's going to be a very big trend going forward, at least for 3 to 5 years.
Thank you. So I think what I gathered from both your responses is there is an opportunity here for creating more efficiencies, both from a retail perspective as well as a wholesale or settlement perspective as well, and to significantly bring down costs. As we say in our parlance, it's about the 3 Fs, right? Faster, frictionless, and freemium. So we are getting there. Thank you for that. I want to just go a little deeper into this topic and go, since we are talking about interoperability, we've looked at cross-border connectivity and interoperability. But Ridzuan, I want to go back to you in the context of Malaysia. How do you see interoperability playing out, especially, if I'm not mistaken, there are some 30 or 40 odd wallets in Malaysia. There are probably more in Indonesia. There are several wallets in Thailand. There are several wallets in the Philippines. So many of them have their own QR codes. And now we've seen SGQR, we've seen QRPH coming out in the Philippines. The central bank's trying to create at least some sort of a standard. So in your view, how do you see this proliferation or plethora of options or wallets? I know it's good for the customer, but do you also think it's really fragmenting the ecosystem? And do you at some point see a reconsolidation happening again? I mean, I don't think that anybody would believe that 30 or 40 wallets in a single country is sustainable.
Yeah, I mean, I agree with that. I think from a Malaysia context to begin with, I think we do have too many e-wallets. And if you notice, only a handful are really functioning and practically in business and able to actually serve the needs. Having said that, I mean, in terms of going forward, when you look at the infrastructure that's enabling the interoperability as well as the infrastructure that's actually going forward, there's a legacy in terms of the ownership of the infrastructure itself. In Malaysia, for example, the payment exchange is handled by a company called PayNet, and 11 out of 12 in terms of the shareholders are owned by the legacy bank. So you can imagine the reluctance of them actually trying to allow the wallet players to come onto the PayNet itself directly or indirectly. And this is where I think the not because of technology and not because of the inability to understand what needs to go forward, but the mindset of the incumbent actually doesn't allow co-creation or collaboration to happen. That's one thing. And then when you look into going forward, as I mentioned earlier, we shouldn't be thinking along the line of how the European market actually developed their market and created PSD2, because EU, to begin with, has more or less standard regulation and procedures in terms of how finance is being managed. In ASEAN, in Asia Pacific, in general, we have variety of regulation that we need to reconcile. So to me, if we can agree like how Thailand and Singapore started within PromptPay and PayNow in terms of how infrastructure comes together. I know that this is a G20 initiative, but if you look at the existing infrastructure that allows correspondent banking in the world, it's actually managed by a private sector called SWIFT. And if you look at Visa, if you look at Master, these are not owned by the government, but these are owned by, I think, tech firm, big tech firm that's enabling interoperability. So I think it's really I think important for going forward to look at who are able to actually put things together with lesser interest in terms of biasness and focusing directly in terms of how wholesale and consumer actually could benefit when this future infrastructure is going to be built.
Thank you, Ridzuan. You made a couple of important points. One is about the opportunity being in leveraging the existing infrastructure, which is already doing quite well. And I think we all agree that the bridge between Pay Now and Prompt Pay is a classic, maybe pilot or proof of concept that perhaps can be replicated. In fact, I was moderating a panel a couple of months back at our GIFT Georgia chapter launch, in which we had the Deputy Governor of the Central Bank of the Philippines and also Vijit Lekha, who's the FinTech Director from the Bank of Singapore. And we had the same discussion on whether perhaps a similar cross-border connectivity can be established between the Philippines and Thailand, or maybe Indonesia and Thailand. So that is definitely an area of opportunity, and we've seen this come to life as an example with Prompt Pay and Pay Now. But you made another important observation about incumbents not willing to let go of their vested interests, if I may be as blunt as that. And we have one expert here from the incumbent. Maggie, I want to go back to you on this point, because this is something which usually gets discussed, and you belong to an organization which is widely seen as maybe one of the more, if not the most progressive banks in the region. You have openly talked about collaborating with the fintechs and the ecosystem rather than competing. You have a slew of open APIs, etc. So very quickly tell our audience on how DBS goes about it. Aren't you scared of opening up and losing control? As Ridzuan said, the European model of top-down does not work in Asia. So how are you looking at collaboration and open APIs in the context of open banking?
First of all, I think DBS is not a very traditional incumbent bank. Making banking invisible so that our customer can bank less and live more is our core mission. So I think we have been working with all these fintech companies, even in Hong Kong, in Singapore, India, Indonesia. We have been with open arm to work with the fintech company. So I think that is the way that to make us progress, and also we need to accelerate and facilitate the open banking. The trend going forward. I think what we have been doing is we are not only building our infrastructure more modern, we call it modern tech. We also make sure that some of the APIs are very adhere to the standard. We have been driving the standardizations in Asia Pacific as well. But at the same time, we also use a lot of AI analytics. All these are data analytics. If you heard about the DBS, a data-driven, we call DDOM model, that is a data-driven operating model. We use the data a lot to ensure that all this information, together with the third-party owners, we can actually coming up a very good data insights to facilitate the journey design, and also to facilitate some of the good use case for our customers. I think we need to make sure ourselves, we have been the first pioneers to use the cloud computing. We have been pioneering to use all these security to ensure that the banking platform have a high standard of security, to ensure that when there's authentication, authorization, and also the access control, we actually need to get to new standards. So I think I don't think the banks need to really protect themselves, because I think the trend is coming on. What we need to say is, what we need to do is embrace the new technology, embrace open banking thinking, and working with the industry leaders to ensure the standard is achieved, and make sure that we are interoperable as well.
Thank you, Maggie. And I want to reiterate and paraphrase what you said loud and clear to all our audience members, especially those who might be coming from the banking industry. The change is coming, the change is here, the change is here to stay, and it will only accelerate. So there's no point trying to hide like an ostrich, or there's no point trying to protect your fort. It's better to go out and collaborate. And here we have Maggie talking about it and advocating it openly. So please take home this message. If any of you still believe that there is risk out there, the way to address this risk is not to hide behind your fort, because the fort will crumble, but to kind of adapt to these changes. So I think thank you for that bold message, Maggie, and it's kind of heartening to hear that from, although I know you are not a traditional incumbent, but an incumbent nonetheless. And you made another interesting observation. So that's a great segue to our next topic on, we can call it embedded banking, invisible finance, ambient banking, whatever we want to call it. But the idea basically is the same. With these exponential technologies, we are talking about banking being everywhere and banking becoming more and more invisible while the bank is somewhere. So I like to call it as banking everywhere, bank somewhere. On that segue, my question is to Hockley and Chonladet. Now that we see this embedded finance or invisible finance or ambient finance becoming more and more a reality, and we've heard Maggie talk about it openly. So banks are at least opening up, if not embracing it. In about maybe 7 to 10 years time, is there a real risk that banks will end up becoming like utilities powering the ecosystem, the way our electricity or water companies today? Nobody knows and nobody cares about it as long as you get your electricity and water supply or internet connectivity. Is that the model that banking is moving towards? And if so, what does it mean for the future of banking? What does it mean for banks? What will they need to do if they need to survive, even thrive? Do they need to completely reinvent themselves? Kunchala, that we can start with you.
Thanks for the question, Malik. First of all, I think we need to separate this fall into like two angles, depending on the view of regulators about the new banking or challenger banking. If you talk about UK, of course, the banks itself will be disappearing. I mean, the brand of the bank. And you can see that nowadays we have so many challenger banks, such as Revolut, Monzo, Starling, and many more, including a new bank in Brazil, right? But in ASEAN, I could say, especially in Thailand, from my domain, I think the Bank of Thailand, sorry to mention our regulator name, and the commercial banks, they are quite adaptive to the challenging of the new banks. And we have limited way to issue new license or other way to acquire new license, except that you need to buy the license from the current holders. And our banks, I mean, they have been quite adaptive in the sense that they slash all the fees from retail transferring of the fund a few years ago. And they are very active in terms of bringing new services, such as investment service, embedded into the mobile banking app. So I could say that in Thailand, we are talking about collaborating among fintech startups and banks, as Maggie just mentioned. So that's the way. If you talk about the future, I think, as mentioned earlier, the CBDC will be playing a crucial role in level playing field. So we could see not only banks, but non-banks, such as the e-wallet provider, to come in. And that would be the new shape of how we conduct the banking and investment. And believe me, the line separated between investment and banking would be very blurred, in the way that in the future, there are so many apps to do investment, to do payment, to do banking, and the big techs will come in domestically, internationally. We will see super apps here in Thailand, such as the e-commerce platforms or the ride-hailing platforms, to come in the place of banking and investing. And we will see very big techs, the giant techs like Apple or Facebook, to come into many regions and many parts of this world.
Thank you, Chonladet. Hockley, you want to add to it?
Yeah, if you look at embedded finance, right, it's actually very much related to your very first question on the open finance, or also commonly known as open banking. Because of all these APIs available, right, now a lot of non-financial websites, applications, and business process could integrate into financial services in it. I read the recent report that talk about the revenue opportunity for this embedded finance can increase by as much as 10 times 5 years from now, to a $230 billion category. And most of it will be coming from integrating payments and insurance into traditional processes. So with this, one good example will be the collaboration between Apple and Goldman Sachs, right? For Apple Pay. If you look at it, right, Apple does not have the banking license, but Apple Pay is powered by the banking infrastructure from Goldman Sachs, and it's a win-win opportunity for both, because through Apple they can provide a much better user experience and also the access to the entire Apple ecosystem of users. So this is a win-win for Goldman. But on the other hand, for Goldman, right, this is a new customer segment they by themselves might not be able to penetrate. So I think over the long run, the winners will likely be banks and fintechs that adopt a multi-pronged strategy. For example, like previously when I moderated a panel on the digital banking, UOB Bank, one of the 3 local banks in Singapore, they stated that they use open banking in overseas market for the expansion, because in overseas market, they are the challenger bank. And the availability of embedded finance, open banking allows them to penetrate the market, the new market more readily. Yeah, so that's my view on this.
Thank you. I want to just spend maybe another 5 minutes more on this topic, because this is interesting and important, and there are still many unanswered questions. So I'll go back to you, Maggie. We've heard quite a bit about open finance and embedded banking. We've heard about examples, as Hock said, this Goldman and Goldman Sachs and Apple partnership. There are more and more of these things emerging. If I'm not mistaken, Facebook has invested in Gojek as well in Indonesia. So the big techs are beginning to partner with banks, but also fintechs. It's all kind of fusing and coming together. But tell me, from a banker's perspective, and you've been a veteran of this space for more than 20 years now, you've been in digital banking for decades. Is it just about setting up APIs and saying that, okay, if you go in overseas markets, like Hock said, we leverage APIs and become a challenger bank? Or is it something much deeper in terms of culture and mindset? I mean, can a traditional bank say we'll become a challenger bank by setting up APIs in other markets like a Revolut, etc.? Or is it a very different and fundamentally different way of looking at the world?
Malik, you're very dot on. I think I've been looking into this, API and also open banking for many years. Even though I think in the past we're not talking about open banking, we talk about the collaborations, how to make our experience more enriching. So we need to work with the partners. I think the fundamental, again, I say fundamental, is journey thinking. I think the journey thinking is not embraced by every bank. Because I think they're still very traditional thing about the product. I offer the product, customer need to take it. But the way that we think about it in going forward, we truly want to solve the customer problem and customer pain point. And that's why the journey thinking, when we make our solutions and services fully embed into the customer journey. And be it is a journey of a home buying, be it is a journey of protection, be it is a journey for making purchase for my household grocery, and that all come to very fundamental what's the customer journey. So journey thinking is the most important one, and how we can make the journey fully embedded and making the banking invisible, payment invisible, even all these loan invisible to them, so they can get a credit easily, instantly. I think that is a key winning formula. So very fundamental basics. Think about the customer first.
Thank you, Maggie. And I'm please bear with me. I push a little more on this topic because I know we've been together in banking on the other side for a long time. When we talk about mindset changes, I think you are already an example, and DBS is an example of demonstrating that mindset change. But is it also about going back to the drawing board, if I may say so? Fundamentally, for example, if you start working with partners through APIs, what happens to how you register revenues? And as you said, banks are so used to product lines and product revenues and the way they report, etc. Is it a completely different way of looking at how you make your money or why you exist? And are banks like DBS, if I may ask a little candidly, ready to take the short-term hit for this long-term transition?
I think the way that we look at it is a new business model. We need to I would not say totally forget the traditional way of the banking to make money. I think there's a many different business model for us to work with the partners. So we can talk about subscription base. We can talk about how we can generate revenue from traffic. We can talk about how we make money for co-creating some of the experience to the customer. So there are many ways for us to think about the business model. And there's many ways for us to use the data analytics to determine what's the insight, and so that we can provide different differentiating experience to our customer. So I think we should not be buying by the traditional way that it is a fee based, it is a need we make money on the lean. I think we need to be very open minded. It can be many different ways: subscription based on the traffic, share revenue, co-create any new business model together with our partners.
Excellent. And I once again want to paraphrase and leave this message to our audience, especially bankers in the audience, that keep an open mind. There will be other interesting ways of making money, as the digital economy has shown us over the last 30 years. So don't be stuck with your mindset. With that, I want to go to the next topic, which is again an important one, on the role of big techs and how they have really stormed on the scene, if I may say so, over the last 7 to 10 years, starting with the big Chinese giants. We all know the story of how WeChat and Alipay have created these giant 1 billion user ecosystems. But now we are seeing that come to Asia, other parts of Asia and Southeast Asia as well, whether it is Grab actually officially calling itself a super app, or Gcash in the Philippines trying to do the same, or Gojek in Indonesia, or Paytm in India. So my question is to Khun, Chonladet and Ridzuan, in the next maybe 5 to 7 years, where and how do you see the role of big techs in financial services? And we've been hearing this term a lot more, which is basically ecosystem banking. I think WeChat is really considered to be the pioneer of this, that once you go into that app, you have mini apps and you can do everything. Your whole ecosystem gets taken care of by a messaging app, no less. So is this going to be the future of finance, and how do you see this shaping up? We'll start with Ridzuan and then we'll go to Chonladet.
Yeah, I believe so, that the big tech is definitely going to drive the evolution or the development in the next 5 to 10 years. And when we talk about WeChat, Grab, and those who has evolved from being great of doing one thing and then able to garner huge number of consumer onto their ecosystem and then co-create and then work together with others in terms of providing more value to those customers. And this is where they become the super app, as you mentioned, Malik. I have now seen that there are actually a few other business vertical that's probably different from what has been mentioned, like WeChat using messaging, Grab starting from ride and food delivery. I've seen that big tech is now using, for example, property for them to actually use similar principle in terms of creating an ecosystem, because under COVID, I think property is really undervalued. A lot of opportunities actually are available. I've just had a discussion just last night actually with a property company that's now looking forward in terms of creating an ecosystem that they can embed financial services as well, because for anybody to get into property, that's probably one or maybe one of the largest things they're going to spend in their life. So it makes sense for a super app to be built around property. And this is where I think that the big tech is going to pick and choose certain vertical. In my example is property, in terms of how it actually would facilitate the growth of the embedded financial services going forward. So I think not only that the existing giant like Apple or Alphabet or those known names that's going to come here, but many of those local players, especially in ASEAN, would definitely embrace and continue to, grow, and hopefully they would also become one of the giant in terms of leveraging on becoming a big tech that is going into finance. Yeah, over to you, Kun.
Okay, for my view, if I'm the big tech, okay, let's assume that we need to find a way to contribute such a hybrid of the growth. Okay, so if you have almost everyone in the country to use your app, you have so many diverse customer base, your customer base is too large, right? So then you cannot rely on your existing business model. And that's why going into the fintech space is very attractive for them. So this situation is valid for both someone like Facebook to introducing Libra and now changing to DM, and as well as the Chinese Alibaba to do the Alipay and then and that as well as the WeChat to do WeChat Pay, right? So I think the playbook of these big techs are that they would like to monetize the customer base by offering the payment first. So the payment will come in as a first and foremost as an infrastructure and backbone of everything, and then followed by the lending. Okay, let's say you have so many big data, like from the payment or from the ride hailing or for the food delivery, you can offer the loan with cash flow analysis, not about the collateralized lending. And then you're gonna have insurance marketplace, and then you can have the investment service, and then you can have the crowdfunding and so on. So this is like the common playbook of the big techs all over the world. So whatever will happen within 3 to 5 years, I think it would be happening in the same fashion all over the world.
That's interesting. And if I was just smiling when you're talking about it, I was wondering what Maggie thinks about it. If, bit by bit, these big techs are going to go into the domains of the banks, then what is left? But I think that's a great segue to our next topic, and I definitely want to touch upon it. So I'll address this question to Maggie and Hock, which is on regulations. And Maggie, Piyush Gupta has always been saying that it's not a fair playing field. Fintechs always enjoy regulatory arbitrage. They are not regulated the same way that banks are. They have the advantage of this regulatory arbitrage or the gap that they are making use of. And over the last perhaps 9 to 10 months, we've seen a significant regulatory crackdown in China with the big techs, and it started, I think, last October or November with the cancelled IPO of Ant Group, which was supposed to be the largest IPO in the world, $35 billion at that time. Then we saw, the recent rebuke by the Chinese Data Privacy Authority for the DD IPO, which listed on NASDAQ, and they were very concerned about data privacy. We've seen Chinese SMAR, the anti-competitive regulatory authority levying a fine on Alibaba, and I think also Meituan, etc. My question, therefore, is: are we now finally entering an era where it is likely, if the last 10 years saw fintechs or big techs enjoying a regulatory arbitrage, are we now in an era where the next 10 years will probably see a more level playing field between banks, big techs and fintechs? Maggie, will start with you, and then we'll go to Hock.
I would not say on behalf of other country, but I think my country, China, always is very, government driven, government policy driven. And that's what I share with you. When I arrived China and Shanghai, worked in Shanghai, I got the cultural shock. Being very westernized. The person worked in Singapore and US, and then I think China is highly regulated. If you look at the China's 14th five-year plan, one of the key themes to steer Chinese economic growth is to prioritize the quality of growth rather than the quantity of growth. So that means they put attention on how to manage the risks, financial risks, make sure that we don't have hidden debt, but however, China will not stop innovating. but they need to have a proper governance model in place. So be it how to use the data, make sure it's a legitimate use of data, and how to protect the privacy, data privacy of their people or our people, right? So I think if you look at the report, so it's the first time the government pledged to expand effort against all these business monopolies as part of the efforts to ensure fair market competition. So I think going forward and coming after the recent launch of antitrust crackdown targeting domestic tech giants, and I'm sure that going forward there will be more likelihood that the authority is to take more active approach as interventing the private sector. So, but I think that is Chinese way. They will allow you to do something in a gray line, and then when you become more successful, more scalable, and they come into the pictures to see what they can need to manage. So I think that is very China specific. I'm not sure whether it applies to Singapore, the ASEAN countries, Malaysia, but that is what's happening. But I think China have a scale, so they won't let something improper happening, and that will actually get possible ruin the interest of the people.
Thank you, Maggie. Hock.
Yeah, I tend to agree with Maggie. Likely, the impact will be different in different jurisdictions. I recall like 5 years back when Singapore started our fintech journey, the managing director of MES, Mr. Ravi Menon, was asked this question: how do you handle fintech regulation? So he said that we must balance innovation and regulation. And when the risk of fintech becomes material, the regulatory burden will also be proportionate to the risk. So I think it's an evolution. If you look at China, probably is one of the most advanced country that has implemented the fintech, and it's already grown to a size and scale that I think the regulators are already thinking that it potentially could pose systemic risk to financial stability, and indirectly societal stability might also be called into question if certain risks are not being managed well. So in a way, the power from all the fintech and the big tech already could potentially become a material risk. So if you look from 3 angles, right? For example, for risk, it's also commonly known like and the Ant Group, right? Previously, how they handle their lending marketplace. The risk is actually offloaded to the banks because the banks are actually using all the open banking and collaborate with on Ant Financial's platform because they have a large pool of retail and business users for the banks to look to, and then for them they want business, so they care less about the risk. So in a way, by making sure that and now follow proper financial regulation will help to mitigate this kind of risk fall from the risk from this kind of unfettered lending practices. The other angle is really on data, because all these big tech and fintech companies, they are collecting massive amount of personal data. And if you look at one of the conspiracy theory is that a lot of these big techs, they are looking to IPO. And then I think there is one theory that through the IPO and foreign ownership, right, some of this data might leak out of China. And the third angle to look at is really about market power, because once this big tech become too powerful, right, they might maximize rent seeking and including exploiting consumer, preventing market competition, and this is what the entire antitrust movement is about. So when you combine these 3 things together, right, financial risk, data, and market power, if you combine and if you don't manage well, it could really cause stability problem to the society, I think, and that is something that is very important to China. So I cannot say the same for other countries. They would have very different kind of priorities. Yeah.
Thank you, Hockley and Maggie. And I like the way you kind of summarized it, Hockley, between the financial risk, data risk, and monopoly risk. It's a good lesson, I guess, for many countries who are not as advanced or as big as China, that while open banking and open finance is very good, and it allows competition, etc. It allows more customer choices. You gave the example of lending practices of Ant or WeChat, where I think they used to lend only 2% on their books and 98% was passed on to the bank. So obviously the regulators were worried about another asset bubble or subprime bubble. And it's interesting, Maggie, you and I have lived through the 2008-9 GFC as bankers. Who knows, the next bubble might actually come from big techs or fintechs rather than banks. So it's important, I guess, in a way to ensure that innovation is balanced by the right kind of framework. So thank you for sharing that. We are unfortunately, beginning to run out of time. I have quite a few questions, but we may be able to address only one or two. So let me jump into the next topic, which is what I called as Finance 4.0, which is, or what some experts call as Web 3.0, which is decentralized finance or the Internet of Value. My question is to Ridzuan and Hock. Try and demystify DeFi for our audiences. There is just so much noise around DeFi and decentralized finance. So try and maybe give a very simple explanation of what decentralized finance is, what are its distinguishing features, and where do you see this space evolving over the next 5 years? Ridzuan, we'll start with you.
Thank you, Malik. I think DeFi is really something revolutionary that requires anybody who wants to go into it, whether you are an institution or you are the retail, the individual, you need to have a really good grasp in terms of the incumbent or the current financial system for you to be able to understand where the revolution and the evolution is. To put it simply, what DeFi is allowing to do is there's decentralization in terms of how a transaction, a financial transaction that could happen between two parties without any interruption in between of these two parties, without any intervention by any of the central authority, and largely based on the blockchain technology and the ability to use the smart contract capabilities. So you can imagine if, let's say, I'm sending money to Malik or I'm transacting with Malik, I don't really need to worry about whether Malik is going to be concerned about the exchange rate that he's going to receive from me. All of that actually is embedded in the smart contract that Malik and I have entered into, and the decentralized DeFi actually would facilitate all that as and when Malik and I actually agree for the transaction to happen. So it really is out of the box compared to what is being done now, and it requires a lot of awareness and understanding by those who wants to get involved for them to be able to really appreciate how actually DeFi actually would work going forward. Perhaps Hock can add further based on what's happening also in Singapore. Yeah.
Yeah, I mean, Ridzuan already give a very good explanation. I just want to supplement that currently the entire DeFi is based on the Bitcoin ethos, whereby everyone can participate in financial services. You don't need a bank account. You don't even need to provide your identity. You don't need to provide your email address. As long as you have some crypto that you can post as a collateral, you can then exchange it for some stable coin, which you can then participate in other kinds of financial activities, including insurance, derivatives, and payments. And if you look at the whole DeFi market, right, I think it was in the beginning of 2020, it was just less than $1 billion. The total value of crypto assets being locked into all these DeFi smart contracts. I think this month is already about 80 billion. You can see that the growth really accelerates over the last 1 year, I would think. And then what I feel that the impact, and then we are still in a very early stage, but I think the impact on financial services over the next 3 to 5 years will be tremendous, because a lot of the concepts of DeFi are very revolutionary and very disruptive. And we are already seeing some of the traditional financial institutions coming into this space, offering DeFi funds, because potentially the returns is a lot higher. And if you look at the recent experiment between the MAS and the Central Bank of France, right, when they are doing cross-border CBDC transfer, they use one of the DeFi concepts called auto market maker to use it to determine the exchange rate between Singapore dollar and euro. So you can see that this is just one component of DeFi, and there are many other components of DeFi that can be leveraged on traditional finance and make it even more efficient, more accessible to the end consumers. But of course, we know that in mainstream finance, right, you cannot let anybody to participate. You do need to do KYC, AML, and terrorist financing risks are real. So I think over time, some of these concepts will be modified and adapted to be suitable to be used in mainstream finance. And I think DeFi is going to be one of the key trending topics for the next few years. Thanks.
Thank you, Hock and Ridzuan, and kudos to both of you for explaining such a complex topic in 5 minutes. I wasn't expecting it. So, and we'll just, we are almost out of time. So we'll go to Chonladet. Another aspect of DeFi, which is now really blown up, and at least the millennials are talking about it a lot, NFTs or non-fungible tokens. Chonladet, perhaps if in 2 to 3 minutes, you can quickly explain what NFTs are, what are the distinguishing features, and how do regulators view them?
Okay, so I could say that NFT is going to be the next big thing, especially in Thailand, because NFT would allow the artists to publish the songs, digital art, and all that directly into the market. So it would be another good application of using blockchain. We have cryptocurrency in the past decade as a main application of blockchain, like. So in the near future, I think NFT would be penetrating the mainstream. Nowadays, we have so many artists and athletes like Lionel Messi to do NFT, and Shopify, that e-commerce platform giant from Canada, they just announced that they would bring any merchant's ability to sell the NFT directly to the consumer without changing into the cryptocurrency first. It means that you can use your credit card, either Master or Visa, to buy NFT. Okay. However, NFT is so new that our regulators, for example, in Thailand, they might think that it would be generating some systematic risk, okay, like cryptocurrency or like stable coins. But in my view, NFT is different from the cryptocurrency, or it's much different from the joke coin, like dogs or whatever the animal is. Okay, in my view, we should allow NFT to happen because it is the way to disintermediate, and this is the way to make human to live alongside the robot. Because in terms of the art, okay, human is still the more competent, more variable in terms of entity, and you can use NFT for the art, for linking with physical assets, okay, such as the car or the land or anything else, okay, and you can use NFT to develop the game, okay, so, and so on and so forth, okay. I can give you some example of the music industry. I think we have the governance token or audience in the name of audio. It would allow the artist to produce a song and then directly into the app or the platform, while listeners can pick and choose to listen into this one and that one, and the top songs would be awarded as a token. So this is new, and it will solve many problems relating to the copyright, which is the major problem in this ASEAN area. So keep an eye on that NFT.
Thank you, Chonladet. There's a lot to discuss in DeFi and NFTs, but unfortunately we are out of time. We have one quick audience question. I'll just share it. Anybody is free to take it. The question says that crypto and e-wallets are susceptible, or crypto e-wallets are susceptible to hacking. How can one design a blockchain that is safe for consumers? Anybody wants to take it? Otherwise, I can perhaps quickly explain. Hock?
Yeah, I think the question is more targeted at those crypto wallets that resides in exchanges that got hacked, because by design, crypto wallets are, I mean, those self-custodian crypto wallets are actually quite safe, because only your private key is able to initiate transfer of your crypto from that wallet. And in fact, all the hacking that we have seen are because the exchanges are being compromised in such a way that all the private keys of all the wallets hosted in the exchange are exposed to the hacker. Yeah, but I'm also seeing a lot of innovation happening in this space to make it easier to manage all these things, including the use of biometric in place of remembering your private key to initiate all these transfers. Also, the use of advanced cryptography concepts like zero knowledge proof, to prove, so that you can prove that you know your private key without showing it, and then you can initiate the transfer. So this space, we are still seeing a lot of innovation happening, and I'm sure the customer experience will definitely be improved over time. Yeah.
Thank you, Hock. So we are at the end of time. I want to close with a very quick poll. So this is not a question I'm going to ask. I'm just going to, it's a poll that I'll ask each of you to just choose one of the three options that I'm going to give you. And this I'll ask everybody. The question is, in the next 10 years, my hypothesis is more than 50% of the banks today will not be around. The choices you have are A, obviously, B, you must be out of your mind, or C, can't say, it's complicated. Hock, which one would you choose?
My answer will be complicated, because I spent 20 years in the financial services industry. It really depends on how the banks respond, and you can see the ability to respond differs from country to country. So it really depends. Yeah.
Thank you. Chonladet, A, B, or C?
Okay. In my scope, in my domain in Thailand, I could say B. Banks would stay. I could say that in the past decade, FinTech was pioneered by the private or by the startup, right? But for the next 10 years, it's going to be pioneered by the big banks, okay, and the government sector. Yeah, and if you are the monopolist, welcome to Thailand.
That's interesting. So we had C, we had B. Ridzuan, A, B, or C?
I will be a little bit controversial. I would just choose A, because I think, again, looking at what's happening in Malaysia and looking at the leadership of many of the banks, especially at the board level, like what I saw in Singapore when DBS become what they are today is because of the courage to take the leap of faith to be digitalized. If you don't have that courage, I don't think you actually would be able to survive in the next 10 years. So that's why I choose A.
So strong words and strong message from Ridzuan. Maggie, we've had A, B, and C. You are the tiebreaker. Whichever you choose will become the winner.
No, I have a choice like D. DBS will stay.
Okay, so you are also saying B.
DBS will stay.
Okay, but at a broader level, DBS may say, but I said 50% of the banks. Would you believe that other 50% will stay or will be out of business and become history?
No, I think if you don't have a courage to do the transformations and with open-minded, you will not, the bank will not stay here. So I don't know whether 50% or so, but I think I would encourage all the banks with open-minded and also, you know, determination to digitize and get the transformation as now.
Thank you, Maggie. And anyway, the 50% was just a way to provoke the audience. There is no science behind it. It was just my way of maybe provoking the audience and saying, hey, half of you might be out of business if you don't change. So we've heard those bold call to action from Maggie. With that, we come to the end of our session. I had many more questions I wanted to discuss, but the clock is ticking. So please give a very warm round of applause. And I want to say thank you to my wonderful panelists, Chonladet, Hock, Ridzuan, and of course, Maggie, for an excellent interaction. Till next time. Bye-bye. Thank you.
Thank you. Bye.
Thank you to Malik and our esteemed panel members of such an informative session on a topic very close to my heart. As an ex-banker myself, I was engaged in a lot of technology adaptation in global corporate banking. So thank you, everyone. And with that, we have concluded the first half of day 2 at the Digital Disruptors Week here at Malaysia Tech Month 2021. We shall take a break from our sessions and resume later at 2 p.m. See you then.